Good morning, everyone. It is May 7th, Tuesday, about half an hour before the market's going to open. Yesterday, we had a pretty bullish day. We had the test of the MA50 and we passed that test. So now what we're looking for is the possibility of shorts that are in the market getting triggered today and driving us further upward. So let's see how we're doing in the futures market and see how close we are to actually making that happen. Over in our futures, we are flat, very flat. So there's not even a 0.1, not even 10 basis points, not even 10 basis points, and not even 10 basis points. So we've got a little bit of divergence, but it's not that meaningful because basically we're completely flat. We're at zero. But it is interesting to note that the NASDAQ is down, but the Dow is up. And then we've got the S&P basically in between, not even in between, it is up about the same amount as the Dow Jones. So we would have expected more to see something like this on Monday, where we are a little bit more undecided and then seeing where the market is going to go. But we did get very directional yesterday, just not a lot of volatility. It was just nice, smooth, steady upward movement in the S&P 500. So it's interesting that we're getting this on the Tuesday. So let's see where we're opening up. It should be flat because everything right here is very flat. And yeah, slightly up on the S&P. That's what we expect because we closed at this 517, very close to this 517 level. And it looks like we're going to open at about 517.29 or 30. And NASDAQ slightly up as well, which is, oh, actually, sorry, that's about even on the NASDAQ. And we don't have the Dow, but it's not that important. Up, clearly up on the Dow right here. So what does that mean? Well, looks like some volatility is getting sucked out of the market, which makes it a little bit easier for us to move upwards. And we are inside that critical zone we were talking about yesterday, which is that 517 to 518 region. What we'll want to see is how we react to these purple lines that we have on the charts right here. We haven't changed these lines in at least a couple of weeks. So as long as we've chopped through in this region, and actually we've probably had these lines for over a month, maybe 2 months now, since March, since we hit these line regions, this price region for the first time. So these lines are still holding up very, very well. And this is what I mean by markets have memory and we will react. So you see how well markets reacted to these lines. And then we reacted over here, reacted over here, reacted over here, and then right here. You can see how these lines are dictating places where we pause, which is good to know because if we're not at these lines, then we'll tend to move. We won't pause. We'll move from one line to the next. And these lines are where we've paused in the past, and they're highly likely places where we'll pause in the future. So we're opening right here in between the 516.75 level and the 518, and we are likely to move up to the 518 or to the 517 and potentially pause. If we pause at the 518, we want to see how far down we subsequently move. Do we move super easily through this 517 level down to 515 or down to 512? And then, or if do we move downwards to this 516.75 or 515 level and bounce up? It's all going to be a matter of just how exactly we form these patterns. So yesterday morning where we opened, we went up to the purple line. We paused for most of the morning, and then we moved up to the next purple line. Usually we have a more back and forth motion, especially on a Monday. So today we'll want to see is, do we get directional? If we move up straight to the 518 and then pause there and then move up, then we have a very strong potential of moving straight to 520 or 5 522 lines are pretty close to each other. So this is a whole region of price action from the 520 to 522, a whole region of price action. So if we break above 518, we can easily move straight through to anywhere between 520 and 522. And that would be associated with the short covering that we were talking about the last session, maybe the session before that. I don't remember when we first talked about it. So it's going to be critical to watch. Once we get near this 518 level, we're really going to watch that carefully. Do we get rejected and come back down, or does it move right through that and then we shoot up to the 520 to 522 region? So in order to do that, we don't necessarily need a strong catalyst, but it would definitely help if we had a strong catalyst to get us either moving upwards or moving downwards. We had some earnings. I don't know that they were that big Tuesday. We have some earnings coming up today. So let's see what that is. This morning, before market, Disney, Datadog, Duke Energy. Okay, looks like Datadog is going to be very far down. Duke Energy, down. Disney, down. Palantir, down. Okay, so more downward forces, at least from the earnings perspective. That might drag sentiment down a little bit, but it's interesting that we have these major earnings so far in the morning already, but the S&P is slightly up. So that tells me that the bullish sentiment in the market is still very strong, because we have these major or well-followed names reporting earnings and coming, or at least in the pre-market, being pretty far down. So what we might see today is a lot of gap fills. Palantir gapping down $3 out of 25, so 12%. We might see gap fills. So because of the strength inside the market, we would see a higher probability of moving up during the day in a name like Palantir rather than down. Same with Disney. So they're gapped down to a support level, MA90. So expect that to move upwards. Normally, there would be potential for us to continue to move downwards, but given the strength in the market right now, it looks like there's a pretty high potential for us to move upwards. I wouldn't be betting on that. It's a little bit of a gamble. So if you wanted to do that, like little day trades to the upside in these major names that reported earnings, small amounts, small baby investments, because it is a little bit of a gamble. Today after market, we've got ANET. That's going to be very important, especially it being part of the semiconductors, and semiconductors has been getting the bulk of the attention in this bounce upward. So we're going to want to watch ANET. ANET will probably be very influential in what the market does. And then tomorrow morning before market, Uber. Okay, Uber. That is more of like a consumer sentiment or how well the consumer is feeling. And that's Vista. No, that's not. Yeah, the utility. That's a utility. But that has been doing very well, actually. Yeah, it's been a parabolic sideways movement, pretty strong, almost parabolic upward movement, pull back a little bit beyond the EMA20 and then straight up. So this one will be an interesting earnings to watch to see how they do. And it's part of that XLU, which we saw yesterday afternoon, which has been very, very strong. It's just that we're entering into this resistance range and we were uncomfortable going long until we break out of this resistance range. So far it's looking pretty good this morning. But okay, so what we're looking for is catalysts though for the S&P 500 to make it above the 518 today. And it doesn't look like it's going to be earnings, because we had all those earnings that reported this morning that are gapping down rather than helping. So the strength in the market is pretty impressive, given that all those earnings have those particular stocks gapping down today. So let's say maybe a economic report. And that was interesting. Wasn't there it was a lot longer list, but maybe it was the wrong date. Qashqai, nothing. Consumer credit, there's nothing. Tuesday, May 7th. Yeah, there's nothing. No catalyst right here. Let me just double check this calendar as well. Yeah, May 7th. Qashqai, consumer credit change, crude oil. Okay. Yeah, so no real stimulus that we need to watch out for today. So it looks like it's going to be very technical. So we're going to watch these levels very, very carefully, because the only thing that might trigger us upwards is if we actually do have those shorts that need to be covered. Remember, I wasn't able to verify that there are actually a good number of shorts. Is just based on experience and knowledge of how institutions operate and how a lot of retail traders operate, is that we would have had some shorts that need to be covered over here. And we're getting very near the normal institutional trigger. Retail traders might have already gotten stopped out, but if we have any institutions that need to stop themselves out, it's going to happen in this 518-ish region. So if we just move up a little bit more, we could start seeing some short covering. So let's take a quick look at VIX. VIX slightly down, and it looks like, just given how much we've pulled back so far, we're already in the normal range of 2024. And it looks like if we just drop a little bit further, we're at I would say at the higher end of the normal range of 2024. So it looks like we could get all the way down to the bottom range of the normal range for 2024. And that would help us in the S&P 500 to continue to move upwards. Maybe even before, I was saying how maybe it would be difficult for us to break above the all-time highs here. And I still, from where everything that we're seeing so far, it's still the case that we probably wouldn't pierce it immediately. We would need another pullback to get above it. But it's looking a little bit more likely that we could hit 530 or 535 sometime between now and the end of the summer, or now and election time, which isn't a lot to move up from where we are. So that's still mostly choppy movement. But given the strength that we've seen in this movement all the way up to the all-time highs, and then the strength that we're starting to see inside this market, if all those earnings can't drag us down, then that's some pretty good momentum upwards. It may be that we just flatten out right here at 517, but there is a little bit more possibility now that there's a little bit of wiggle room in terms of exactly how high we might go. We're not going to like 545, 560, that's off the table. That's very extremely low probability, basically very close to zero probability. But this, we have a little bit of wiggle room, because remember, we every time we identify a level, it's actually a region. It's just easier for us to think in terms of just one number, 525. But there's always a wiggle room. It's never an exact level or exact price. It's always a range of prices. So things are looking pretty strong right now. So two major possibilities this morning as we move through here and we start moving upwards to the 520, 522 region, or we hit that 518 and we hit strong resistance and we chop around in this 518, 517, 515 region. Okay, we could go lower, but a stronger possibility for today is chopping sideways or moving up above. The moving lower to say 512 or 510, that is, given the momentum that we've seen coming into today, and that all those earnings that gapped way down hasn't dragged the S&P 500 down in the pre-market. It's still above where we closed yesterday. That is indicating strength and resilience in the market. Maybe not enough to send us higher, but at least enough to keep us chopping sideways rather than coming downwards. So those are our more distinct probabilities. It's either sideways or up. And when I mean sideways, when I say sideways, I mean, yeah, probably above 515, but almost for certain staying above 512 today. And if we stay above 512 today, where's that MA50? It's at 511.72. Then all it would be is just chopping sideways right above the MA50. And if we never touch it, then that would be 1-2 bars completely above that MA50. And tomorrow, if we stayed above that MA50, then we're pretty sure that we're going to stay above the MA50 for the short term. So I think there's not that much else to look at this morning. We went over VIX, TLT. Yeah, TLT is still moving upward. Look how strong that movement upward is, TLT. So this is indicating that bond traders are starting to price in a more of a deflationary environment instead of an inflationary environment, which means they're anticipating that the interest rate cuts. So if we go by the Fed Watch tool, then they think all sorts of high probabilities of the rate cuts between now and December, and this is starting to get priced in to the bonds, and that is actually bullish for the stock market for now. So sometimes bonds and stocks move in opposite directions, and sometimes they move in the same direction. And we've been operating in a inflationary environment for a while, and now this looks like it's shifting. It's starting to roll over and move in a more, as if it's more of a deflationary environment, which implies that the bond market is getting ready for rate cuts. Once again, maybe we saw that before as well, but right now it's looking like we're really gearing up for it. So we might come back and touch this horizontal line. And we'll just look at the dollar real fast. Same as yesterday. Looking like it's looking for direction. It could move down. If it moves down, and so since we did break this trend, a weaker dollar means stronger assets. It means stronger gold, stronger oil, stronger stocks. So that would be bullish action for the stock markets. Okay, so we got a good picture. We have a good idea of what we expect going into today. Now, seasonally, Tuesdays are somewhat down or muted or sideways in the morning, and then more bullish towards the afternoon. That would support the chop sideways or move up theory that I was talking about earlier this morning. Or if we get really soft this morning, then we could move downwards towards this 514 or 512 before bouncing up later. So that gives us a little bit more idea of how this could shape out. And I'd be very surprised and willing to eat my words if we completely break down into the below the 512. I don't see it as a high probability today, but it would bring us right back into this chop sideways between the MA50 and MA90. That would indicate a lot of weakness in the markets that is not being shown to us at this moment. And so it would be something that shows up during the market, which means that it's probably news or some weird earnings thing or delayed reaction to earnings, or Elon Musk does something weird again, and then just random news like that would remove optimism from the sentiment in the market. And of course, things like that we can't foresee, but really things like that, for it to be that negative, is pretty rare also. So we're not going to expect that at all. Most likely we'll chop sideways for the morning and then move upwards, or just chop sideways. And of course, it could happen a different way as well. Like we could move up and then move back in. But the stronger possibility is that we'll chop sideways, and then later in the afternoon, if there is going to be a push upwards, it's most likely going to happen in the afternoon. All right, we'll leave it right there. We've got 8 minutes to the market open, so I'll leave you guys to prepare, and I will see you in the post market.